So it's currently the 22nd of July. 22 days have passed in this month alone and I have lost over 25,000 US dollars. And I absolutely love it. Over 6% from my portfolio wiped away, maybe never to be seen again, and I should be crying, but actually I'm laughing. In fact, I love being in this position. Now, if you clicked on this video, you're probably thinking, what is this lunatic with a beard on about? He should be in an asylum, and well, yeah, you're probably right, but that's a different story in itself. But why does this guy with a beard love losing money? What a wacko. And well, you're absolutely wrong. Now look, there is method to the madness, and in this video I'm going to tell you why I absolutely love seeing big red months on my portfolio, but more importantly, why you should love seeing these big red months too. Now before we get into it, just remember this is not financial advice. I am just a bloke on the internet who absolutely despises cutting his own grass. And that said, if you can hear my gardener in this video, big apologies. There's nothing really I can do about it unless I go and cut the grass myself, and well, that's not going to happen. Make sure you've powered up your day and smash that like button blue, and if you want to join our chat room for live, sign up with eToro on the pinned comment, use that link, deposit, make a trade, and you do get that lifetime access to the LWT eToro chat room. I'm there pretty much daily. You can go in there and ask me questions directly. Now moving on quickly, why do I love losing money in the stock market? Now look, winning and losing is not only a part of life, but it's definitely a part of investing, and if you're looking at day trading, probably more so day trading. But losing on investments, it's just part of the game. But again, so far this month, I am down way over 25,000 US dollars. And whether you follow me on eToro, you follow me in the WhatsApp group, there's a link for that down on Patreon in the description, or you follow me in the chat room, you're probably wondering why the hell is this guy with a beard always so happy when he sees a big red day? And really, there's two main reasons for it. The first reason is the historical data. If we look at the S&P 500, and if you don't know what the S&P 500 is, very quickly, it's the 500 largest companies in the US grouped together, and it's a good way to sort of track if you're beating the market or not beating the market. But the S&P 500 has historically, since 1926, had an average return of around about 10 to 11% all the way up to 2018. Now again, if we went even higher than that to date, it's probably going to be a lot more than 10 or 11% because of the last year alone, and we're currently near all-time highs. So these big red months, the unrealized gains, and again, unrealized basically means I haven't sold it and realized the loss yet. I haven't got the cash back, it's still invested at a certain price. These unrealized gains don't really mean anything to me, because if I have full conviction in that stock, I think it's going to go up in the long term, and so will the overall market. In other words, when you sell it, you'll only see a real loss when you've sold that stock at a loss and it's back in your account in cash, and it says the realized gains or loss on your account are X. But if you hold on to your position, then there is a chance that this stock does go up in the future and your red trade is hopefully short-lived, and you can eventually sell it for a profit in the future. Now this is usually called bag holding, and it's not usually a good thing. I want to be very clear here. If you're bag holding a company that is not profitable and facing bankruptcy, it's not the same as buying Apple, Amazon, Netflix, Google, or any of these tech stocks, or any of these stocks that literally, like BP is another example, where it is good value and it's got a legitimate business model. If you're buying AMC and you're going to bag hold it until it goes back up, well, that's a much higher risk trade, and that's down to you as an investor. The key here really is making sure you pick the right stocks in the right time frame, and I'll come onto that in just a second. But let's move on to point two, why I'm not so bothered about losing 25,000 US dollars. In fact, I hope I lose a lot more. Now, if the market is falling and I see unrealized gains in some stocks or even my whole portfolio, all I see it as is a buying opportunity. In fact, I really hope the market continues falling so I can buy more and more. And I'll come into my strategy in a bit more depth again in just a second in this video. If I've planned my trade correctly and I have full conviction still in this company, and the only thing really that's changed is the stock price, why would I not buy more? I mean, if the company came out and said they're going to go and kill baby seals, of course that's a big change. But if the company's stock price has just gone down because, I don't know, they missed earnings or something like that, then that's fine. That, to me, that's just a buying opportunity where I can lower my average. And if I lower my average and I get more shares, that means when the stock does go up to the price I expect it to go, I make even more money than I initially would have anyway. Now look, it's always hard for when investors lose money or they see that they're losing money day on day, especially for new investors. I completely get it and I was there once myself. But the key reason why this strategy works for me is I do not YOLO in with my whole account into one play at a time. In fact, I size in very, very slowly, and I'll come onto that strategy right now. I scale in very, very small and I pray to the stock market gods that this stock comes falling down so I can buy more and more and more as the stock gets lower, lower and lower. If the Miley Cyrus has taught us anything, when the market falls like this, it's a great opportunity to buy value stocks and stocks that you think will recover and have oversold. So now you sort of know my mindset and why I don't care about losing money in the short term and why I don't mind seeing red on my account. And I want to be very clear here, my account is up on the year by quite a decent amount. It's just a bad month. But the reason why I really don't care is get yourself in the mindset that when the market falls or your portfolio drops, provided you've done your proper planning, then this is nothing more than a buying opportunity at a discount. See it like this, you go into your favorite restaurant, a restaurant you visit regularly, and you always go in and buy the same meal because you know it's good. That could be a T-bone steak, or if you're a vegetarian, it could be any rabbit food, but whatever you buy, it's the same thing time after time because you know it's good in there and that's what you buy. Then one day you go in and you see the same meal is 40% off. What meal do you buy? The same meal. You're just getting a 40% discount, and that 40% can go to, I don't know, some extra cocktails, a dessert, but the key thing is you're getting more bang for your buck. You're still getting the same product, but you're getting it at a discount, and that's sort of the mindset you need to have. And if it was a 50% discount, you could buy one and maybe get a coupon, and then you get your next meal next time you go for free. Or, well, not free, but the same price. You know what I'm trying to say here. But you see, the point here is not to panic when you see red on screen. You need to flip your mind upside down and think, this could be a great buying opportunity, and I want to go through my whole process right now. Now, there's an expression I learned in the military, and I think some civilians have picked it up now as well, and it's the 6 Ps. Proper planning prevents piss poor performance. And I use this in every aspect of investing as well. If you plan your trade and your investment correctly, you've done every bit of research, then you have the best chance of securing what you want to get from that said investment. Plan your investment properly. I just don't go on YouTube and watch a video, even from my channel, and say, that's good enough for me, I'm gonna go and buy this company. I don't go on tip ranks and just pick any stock. I do go on YouTube and look for other people's opinions because I think it's important, but I don't go on one thing at all. I have several, if not dozens, of aspects when it comes to looking at an investment. So what I do is I look for a stock that I think I might be interested in, maybe via a screener, and then I gather as much data as I like. And then when I finally think that this company might be worth investing in, I look at the chart. I put it on a watch list, and it stays there for literally months sometimes. And then as I see it start falling, I maybe put an alert in, an alarm that at this price, maybe it looks like it's good value. And then when that alarm does eventually trigger, it goes off on my phone, on my Mac, I get an email, and then I open up this trade and I say, okay, what's changed? Why is it falling? Do all the previous criteria still match? Does the company still have good profit projections for the future? Why is it down? And if nothing's changed other than the price that I feel it's worth an investment, then I go and buy some. I go and buy like between $1,000 and $2,000. That's like usually my starter position into that ticker. And to be clear, I want to put it in perspective. That's 0.25 to 0.5% of my current portfolio. It's not a lot in terms of wealth. And I'm not saying that to brag. I'm saying that's how much I allocate to a starter in any said stock. Now, I know it's harder if you have a smaller account to do so, but the key here is you start small and then you build on the downside. And then what I do is once I'm in it, I'm watching it more vigorously because obviously there's money on the line. But then what I'll do is I'll look at the chart and I'll add another maybe 10-15% lower, put another alarm in. And every time the alarm goes off, I go and check the company, make sure the news is not too bad, again, like they're not killing seals, and then I might add more. But as it comes down, I add more and more and more. And there's proof in that with BP, there's proof in that with Cineworld. When these stocks fall big, I tend to buy in bigger size as it goes down. And this way you get a good average. And as the stock does recover and go to the upside, you make even more money than your initial entry. The big problem investors have right now is they YOLO in with as much money as they can in one stock, then it falls and they panic. And retail investors always lose because of this. But that does beg the question, it's not always like this. Sometimes you do go red on a trade and it's because they're killing baby seals. When do you sell a stock? And I think that's a video for itself. So if you want to see a video on when you should actually sell a stock for a loss, let me know down in the comments and I can try and make that happen. It's obviously a much more broader situation, but I do have some examples of recent months just gone by. So to summarize, when you're red on a trade, do not freak out. If you've planned properly and you've remembered the 6 Ps, then you should just be buying more if you can. Losses are only losses when they're realized, but that said, you should also realize losses if the company is killing baby seals. Now, I hope this gets through to somebody, because a lot of investors, especially the new retail investors, they see it as a selling opportunity rather than a buying opportunity, and you really need to flip that mindset. So if you have found it helpful, make sure that like button is turned blue. Again, if you want to support the channel and get some perks, Patreon down in the description. If you can do me the kind favor of dropping the code word down below, which is Jungle Book, completely random, I know. And if you do like this kind of stuff and you're not already, make sure you have subscribed and turn the bell. That's it from me. All the best for the months going forward. See you in the next one. Take care. Peace.